Hey everybody, it's Jack and welcome back. Today I have another dividend portfolio building video. This is part 2 of a 3-part video series where in each video I build a different dividend stock portfolio that focuses on a different style of dividend stock. So in video number 1 last week, I focused on a dividend portfolio for income generation. So these were all stocks in different sectors that offer high dividend yields. So 6 to 7% dividend, but over the years, they haven't seen a whole lot of growth in their overall share price. So in today's video, I'm going to flip the switch and do the exact opposite. I'm going to be focusing on dividend stocks that have a much smaller dividend yield in the 1 to 3% range, but have a lot more room for growth in their overall share price. So these are all stocks that have seen some great growth over the past few years and are projected to just continue that growth over the next few years to come. The stocks that I choose and showcase today are great for any investor who's primarily focused on growing their portfolio in size and less worried about dividends and passive income. What I like about these type of dividend stocks is that they give you exposure to growth in your portfolio, but minimize the risk involved. Because they offer that dividend in the 1 to 3% range, if anything were to happen and the market in general goes south, at least you're still pocketing that 1 to 3% passive income, and you're not just sitting there with a regular growth stock where you're not getting anything out of it and you're just seeing red all the time. So it's a really nice way to bring down the risk in your investment by holding these growth dividend stocks. By no means am I intending for you to go out and build this exact portfolio. These are just great growth dividend stocks in a wide range of sectors or industries of the market that offer this ability. Myself personally, I'm going to be choosing 1 or 2 of these stocks and adding them to my portfolio if I haven't already. And you'll see that my strategy as a whole is to pick a few stocks from each one of these portfolios that I build. So a few stocks from the income portfolio, a few from the growth, and then my third video will be a portfolio that is balanced. So it's going to be stocks that offer a 4 to 5% dividend, but also have room for some small growth year over year. So without further ado, let's jump in and build a portfolio that focuses on growth dividend stocks. The first growth dividend stock that I will be featuring in this video is in the technology sector. We all know how technology stocks can grow extremely fast. I'm actually going to quickly go over 2 tech stocks because I really couldn't decide between the 2 on which one I liked better. These are both great companies that have been growing extremely fast and offer that slight dividend. The first technology company is Absolute Software Corp, ticker symbol ABST, and it's currently trading at $18.90 per share. This is a cybersecurity company that has seen some crazy growth over the past year and currently offers a dividend yield of 1.62%. If we look at the chart for the previous year, you can see the crazy growth that Absolute Software has been seeing. It went from a year ago being at under $8 to now being at $18.90. Absolute Software has been seeing some crazy growth as cybersecurity becomes more in demand as more and more data moves online. Absolute Software currently has 5 analyst ratings, 4 buys and 1 hold, with the average 1-year price target being at $21.90, around a 16% upside from current prices. So not only is it forecasted to get 16% growth, but you're also still getting that 1.6% dividend. The second technology company is also a financial company. It's in the fintech space. It's GOEASY Ltd, ticker symbol GSY, and it currently trades at $131 per share. So this is a more expensive stock to buy. GOEASY is an online platform that makes it super easy to get a loan in a matter of minutes. And they currently offer a 2% dividend yield. And if we look at the share price for the 1 year, we can see that GOEASY has gone from under $30 to $130 in the past year. And if we look at the 5-year, it has very solid growth and then even more rapid, as I said, in the past year. This is a company that has seen some great growth over the past year and still has a really low PE ratio at 14.99. I think GOEASY is one of the top Canadian companies poised to continue its growth over the next year, while you're still getting that 2% dividend in your pocket. So we've now got our first growth dividend stock in the technology sector, which was Absolute Software and GOEASY. We're now going to jump into the renewable energy sector. Stock number 2 is one that I personally own and have talked about a bit on the channel previously. It is Brookfield Renewable, ticker symbol BEP-UN, or BEPC. There's two different versions to Brookfield Renewable. BEPC is the corporated version. So if you're in a taxable account, either a personal or just cash account, I recommend going with BEPC. Because it is corporated, it allows a tax break on the dividend you collect, which is great for a taxable account. Whereas if you're in a non-taxable account, such as a TFSA or RRSP, I recommend going with BEP-UN because you don't really care about the tax break if you're not being taxed. Brookfield Renewable Partners is a renewable energy company with a global reach and has diverse operations in every subcategory of renewable energy. It currently trades at $52.30 at the time of filming this video, and it offers a dividend yield of 3.17%, so a pretty solid dividend. And if we look at its chart for the past year, we can see that Brookfield Renewable Partners has seen some pretty great growth. It's gone from $27 all the way up to $58.60 before it fell down and is now trading at the $52 range. So you can see it's even gone through a quite significant pullback from the $62, almost $63 range, all the way down to $52 where it currently trades. So if we go to its 5-year chart, we can see that from the beginning of 2019 until now, Brookfield Renewables has seen some very consistent growth, and it's on one of its biggest pullbacks it's seen in quite a long time currently. So this is a great buying opportunity for new investors into Brookfield Renewable. This is great exposures to the renewable energy sector, which is poised to grow over the next few decades. So we now have a technology stock and a renewable energy stock in Brookfield Renewables in our current growth dividend portfolio. Now comes time to add a third stock to the portfolio, and this is one that is a very interesting company. It's a company in the digital media and telecom space. The company in question is QUEBECOR, ticker symbol QBR-B. QUEBECOR Inc. currently trades at $35.15 and has a dividend yield of 3.31%. So again, a pretty solid dividend. And if we look at its growth over the past year, we can see that it's went from $27 all the way to where it currently stands at $35. And if we check its 5-year chart, you can see the consistency of its growth. From 2016 onwards, it's just growing steadily. So this is a great play to hold in an account for growth while getting that 3% dividend. QUEBECOR is a very safe and stable company with a PE ratio under 15. QUEBECOR currently has 6 analyst ratings, 5 buys and 1 hold for an overall rating of a strong buy. And if we look at the average price target for the 12-month forecasted, it's an average of $38.80, a 10% upside, with the high being at $40 and the low at $36. So this is a company that has strong upside growth potential while it has that nice 3% dividend yield. So we now have 3 stocks in our growth dividend portfolio, and it comes time to add a fourth. The fourth stock that we'll be adding today is in the manufacturing industry or sector. It's a company that deals with manufacturing automotive parts. And in late 2020, they signed a huge deal to now be manufacturing electronic vehicle parts. So this is going to give them some huge growth potential over the next coming years as we begin to see a shift more towards electronic vehicles or EVs. The company I'm talking about is MAGNA International, ticker symbol MG. MAGNA International currently trades at $113 per share. So again, this is another not cheap stock as it is above $100. MAGNA offers a 1.89% dividend yield. So looking at MAGNA's chart, we can see at the 6-month chart, it's very consistent with its growth. And if we look at the 1-year chart as well, we can continue to see that. This is a stock that has been growing extremely fast as it is connected to the EV space in a way. This is a great play long-term if you want to get a little bit of exposure to the EV space while still getting a nice dividend. This is one that I think will continue to grow over the next few years and offer some great returns for shareholders. So now that we've finished with MAGNA International, let's add a 5th and final stock to our growth dividend portfolio. This one's in an industry we haven't yet touched. It's in the consumer goods industry. This is a company that deals with the manufacturing and production of accessibility devices. So we're talking about ramps or elevators and things like that that allow people who have mobility impairment to get around in public or private places. This is a really cool company, and it also pays a monthly dividend. So you're going to be getting that small dividend every single month. The company I'm talking about is SAVARIA Corp, ticker symbol SIS. SAVARIA Corp currently trades at $17.54 per share and has a dividend yield of 2.76%. So not the highest of dividend yields, but not the lowest, kind of right in the middle. So if we look at SAVARIA Corp's stock chart for the past 6 months, we can see that in the past 3 months, it has been really shooting upwards, going from $13 to where it's currently at $17.50. And if we look at the past year, we can see that it's seen some good growth with a little bit of consolidation and then continuing upwards. So overall, continuing in a nice upwards direction. And this is one that I think will continue to grow. SAVARIA Corp has 4 analyst ratings that are all buys, with the average forecast for the 12 months being $20.25, a 15% upside. And if it were to get to its high of 22, that would be looking at a 20 to 30% upside. So analysts think SAVARIA Corp has room to continue growing over the next year. So for that reason, I think it is one of the top growth dividend stocks with its upwards potential as well as the nice dividend. So there we have it. 6 great growth dividend stocks. We managed to successfully build a portfolio focused on growth with dividend stocks from 5 very different sectors. These stocks are all meant for growth plays in the future, but still offer a nice small dividend. The overall portfolio, if you were to invest equally in all of these stocks, would offer a 2.46% total dividend, which is not too bad considering these are all meant for growth. Again, I'm not expecting anyone to go out and build a full portfolio with all of these stocks. I really just hope that you were able to pull some information that was useful to you from this video and maybe add 1 or 2 of these growth dividend stocks to your watch list and maybe in the future to your portfolio. And I'm super excited for next week's video, video 3 in the series, where I pick a balanced portfolio of stocks that offer that 4 to 5% dividend and have some small room for growth year over year. And again, I hope you guys enjoyed this video. If you did, let me know your favorite stock from the video down below in the comments, or potentially one that you're looking or adding to your watch list. And I hope you guys enjoyed. If you did, smash that like button and subscribe to the channel. It means a lot and helps me grow. And I'll see ya in the next one.